Welcome back to the Snod Pod with Jon Snodgrass, your mortgage resource, where we're talking mortgages, real estate, and beyond. And today, a little commercial real estate. I've got Steve Johnson of Red Sky Partners in here today. Steve, thanks for
John, thanks, man. We've talked about this many times, so I'm glad to finally get put in the hot seat here.
Yeah, I'm glad my people and your people were able to work out our
a couple
schedules.
of double espressos, and we are ready to go.
All right, well, I just wanted to get into some commercial real estate. Just haven't really done any episodes. I don't do a ton, although I've got a little bit of experience with it. First, can you just tell me, I always start with everybody like, hey, how did you get into commercial real estate? What did you do first? What was your progression to Red Sky Partners?
Yeah, so kind of a long story. I'll compress it down, but essentially,
we need to eat some time though. So.
Graduated from the University of Wisconsin. As what happens sometimes is you think you're going to get in the real estate program and you didn't. So graduated with a business management degree, but had an interest in real estate, and turned out when I graduated, it was 2008, so real estate was a great time to get into.
Great recession
to just hop in. And so I had a family friend who kind of like brought me into his company where they were doing some development, and just was there to absorb as much as I could. Right. So go to different construction meetings, go and make cold calls, things like this. So just like be in it, but like definitely on the ground floor of like real estate, as real estate was kind of crumbling all around us.
You bring up cold calls, which I did something similar, door-to-door sales. But what tell me like a cold call. Like you're trying to like rent out a commercial building?
So my job was like to take the vacancy that had come up either there or had been sticking around, and then at that time was either call up businesses or like jump into a office building or an industrial building and hand them a flyer and
so knocking on doors.
Hey, interested if you'd like to move to one of our buildings, which at that time was a tough sell for many businesses. And then like doing a lot of networking with like commercial brokers and whatnot around the Milwaukee area to see if like they may have something that was going to bring tenants to our building so that we could fill up our building.
So with the cold calling, I imagine it added some confidence or just like be able to field rejection.
It certainly was clear when people weren't interested, but like you always appreciated people kind of humoring you of like taking your flyer and being like, hey, if we're moving, you're the first guy we're going to call.
Well, so real quick before you keep going with your journey, your story, like, so I was knocking on doors, trying, in my last year of college, working for AT&T at the time, trying to get people to sign up for their landline, because at the time they had just been let out of their kind of lockout of landline because they got sued for being a monopoly in the late 80s.
Yeah.
And so anyways, I'd knock on and be like, hey, Steve, you should switch from TDS Metrocom to here. But yeah, most of it was like, get out of here. But
I have found that door-to-door Girl Scout cookie sales is much easier than the cold calling I did back in my younger years.
But learning experience and like, I don't know. Help.
It allowed the opportunity to like be a young kid out there in real estate, understanding that the environment was not great, and like just learn, like sit, learn. In the development space, just sitting in on construction meetings. Truly, my first meeting, I asked one of my, my boss or my superior at that time, of like, I left the first construction meeting and I was like, they keep talking about rock, and I don't know what they're talking about. And he's like, it's drywall. And I'm like, I've never heard that comment. So like, just when you start talking in the construction world about all these trades who are there, from the electricians to the plumbers to the drywallers to, everybody is like, you just have to kind of keep up. Otherwise, and ask questions. Otherwise you fall behind. You don't want to be the guy who has absolutely no clue what was going on.
Sure.
But I wasn't there to provide a ton of value, but I was there to like be another helping hand for our development team.
And be a sponge
and continue to like learn, the ins and outs of like turning a piece of dirt into a full-blown building,
Okay.
right? And then a business moving in and operating their business, right? So there's a lot of moving parts when it comes to it. So there's a lot to learn when you first jump in.
Okay. Then next you went on to, you did some property management before you got into your own.
So from there, I moved into resident or multifamily management. It was taking over a project that was my father's after his manager had passed away, and I had moved on to a new path, thinking I was going to be a commercial real estate broker, but based on the time period, like not
Just
being a great time to enter into the market. So I ended up kind of going down to Kenosha and was like the boots on the ground type of guy of like doing leases, just learning. A big like multiple year learning process of taking like a class C type of property built in the 1960s, 2 bedrooms and 1 bedrooms where rent is like, $500 a month, and like turning over units and collecting rent and picking up laundry coin and dealing with tenant issues that arise, and like spent several years trying to like turn a project around that had kind of like fallen on some bad times.
So are you doing some of the work too? Like you're going in there, you're painting,
spent some days like going down there painting, did some cabinet refinishes.
Okay.
A lot of it was like every day was just a new day, right?
Yeah.
So in my opinion, in real estate, sometimes I'm like, whether it's the entrepreneurial path or otherwise, is like there's flexibility in your day, and when you're on the management side of anything, like whatever you plan for that day is like can change.
Right.
So you might have your whole day stacked of what you're about to do, and then like one phone call will change all of that. So that was a change of pace too, is like just going from, I could have a day where I have absolutely nothing going on, and you could either sit around and do nothing, or you could like go work on units, or as soon as a phone call comes in, like you got an emergency somewhere. So getting into the management business is like definitely has a learning curve to it.
Well, and you got to be, it sounds like you got to be nimble, like you said.
You got to be nimble, and you got to be ready for anything that you have to like build your network of people, whether that be contractors or like people you can depend on to like pick up where, you can't be everywhere all the time. Right. So at that time when I had started in the multifamily, I was managing a Kenosha building, a Whitewater building, and a Sun Prairie building.
Wow.
So no part of it was close by.
You're all over the place.
Yeah, and so like you have to build your relationships in those areas to like
totally
when you can't be there,
you're not going to use the plumber from Michigan
right.
to help you out in Sun Prairie.
Right.
So all this stuff is probably helping you to, take that next step to start your own business. And I guess before we go right into that, you got a business partner, how did you guys connect, and how did you decide to do it together?
So my business partner, Abby, we've known each other for probably since like middle school.
Okay.
Went to college together, went separate ways. And then she was in the financial services world down in Chicago during this same time period of 09, 10, 11. And
what was she doing?
She was doing lending with Bank of America.
Okay.
I would say at this time, like the lending environment in the commercial space was pretty tough.
Yeah. And
she had taken some time off from work to travel, and her and I went out on a trip to New Zealand together, and we traveled, and in, at least from my end of the table, is she kind of asked me like, what do you want to do when you grow up? And I was like, that's a great question, because I don't know what I'm
still
doing
asking
right now.
that question.
Yeah, like I don't know what I'm doing right now, quite frankly. But I just wanted to buy something.
Yeah.
And she concluded her trip after I was already home, and about 2 months later, she came home and she was like, hey, I think we should buy something. And I was like, okay, sounds good. Like, what do we want to buy? And we also, like, we don't have any money, so I don't know how this all works. So she ended up moving back to the Milwaukee area from Chicago, and her and I would hop in the car during the week, and we would literally go and write down addresses of buildings around the Milwaukee area to see if somebody like to find the owners and see if somebody may want to like sell to us.
Was it? I'm just curious. Like, was it like strategic, or were you just going around?
No, it was
anybody?
like, look, there's an apartment. Like, there's an apartment.
So it wasn't like okay.
Yeah, and so like again, we were naive and like we didn't know what we were even looking for.
Yeah,
quite frankly,
just wanted to get in.
Yeah, and we had. I was out there looking at like duplexes, fourplexes, and eightplexes, thinking like, man, if I buy an 8-family, this is going to be amazing. Like, I'm going to really, hit a home run here. And the first deal that we ended up doing was 2 separate properties, which was a banking relationship from Abby, which turned out to be 97 units.
Oh, wow.
So I was like, wow, like, great. That's cool. Like, how in the world?
8 to 97.
Yeah, how in the world are we going to, like, afford to put anything like this together?
Yeah.
My family's in some real estate. Her family's in some real estate. But I was like, I had no clue how this was even going to happen.
Okay.
So what we ended up doing is starting a company.
Yeah.
And we went after the 2 projects. And at that time, for the 97 units, it was like, a $7 million deal, something around there. And so we had to go out and raise the money, mostly family and friends. A lot of those people are still our same original investors that we do projects with. And we just became like, she was the leasing and accounting person, and I was like the management guy.
Okay.
So we were like on site at both properties throughout the week, each and every week, to like handle all the day-to-day stuff, and kind of thought that was like pretty cool. We could pay the management fee, and when you put the deal together, we're there to, raise money, pay a return to our investors who put their money on us. Mm-hmm. So those deals that deal was interesting. It was a very unique situation where we had a senior living complex and like a 3-bedroom apartment complex, and they were dramatically different properties, which is kind of what makes real estate fun. Is like, it's the same thing. They're buildings, but like each building is unique into itself, and therefore like challenges are different, like successes are different. And so like, again, it's just kind of like continuing on that path of like, we're going to learn.
Yeah.
Abby had never managed an apartment in her life.
Okay.
I had
so you
done
had the
some
experience there, yeah.
And like, we just kind of like put it together, and we still own one of those projects.
Okay.
In Oak Creek, but we sold one of the other ones a couple of years back.
So when you got the 97 units, you've got some property management experience. Did you decide, hey, we're just starting here, I'm just going to do this management on my own, or did you consider hiring a management company?
No. So when we bought our first projects, I think I was 27.
Okay.
So right at the end of the day, like for us, it was like she had quit her job. I was not making money that I would wanted to be making at that time. And so like the opportunity was like, well, like the way we make money is we manage the property to get paid a management fee. And then like there's different ways in which you set up a project in which you pay your investors back. And for us, we did a preferred return and promote, which is we tell you, the investor, that your preferred return will be 8%.
Okay.
And we will pay you before we pay anybody else.
Okay.
So whenever there's a distribution, like you, the investor, every quarter you will receive a check for 8% of your original investment. And then with that, if we distribute over 8%, then basically we get paid a fee to say like, hey, we're doing well here, right?
Okay.
Like we've paid you what
Done
you
well
wanted.
by you.
Now we'll kind of split that the next position of distribution.
Tranche.
Yeah.
So a question for you on this. So I invested in real estate, something similar a long time ago in a big city, and putting them. I signed some document that basically, hey, this is the projected return. However, you could also lose everything. I'm assuming that.
Yeah,
you got everybody.
You did read the document, right? Yeah.
I mean, I browsed over it.
Yeah.
Too trusting.
So, Yeah, every deal is set up differently. But yes, for you as a passive investor, like
you got to know going in.
Your risk is that you will lose your investment, right? As a passive investor, though, you will not guarantee a loan, right? So therefore, a bank will never come after you, Jon Snodgrass, and say, hey, this project's not going well. We need to look at your assets. So you're entering into this as a passive investor. Then there's another side that's the sponsor, where they're the ones who are going to guarantee loans. They're the ones who are going to have more at risk, we'll say, when you're going into a development or any type of real estate investment, where there's going to be 2 or maybe even 3 parties, and the top of the pyramid is the guys who are going to sign their name on the dotted line.
So you and Abby, we
guarantee that if this doesn't go well, that you can, come and find us.
Sure.
And we'll talk. You'll never speak with the bank about that.
Yeah.
For you,
passive
you're just saying, did I get my check? Did I not get my check?
Did I not?
Is my investment still there? Is my investment totally gone?
Did I get a check this year, Steve?
Yeah. Well, I don't know. It's not for you to talk to with me. Yeah. So.
Well, one other, or I guess, I think this is along the same topic. So I got approached by another financial planner I use. They work with a company. They came to me and a couple people for an investment. I ended up not getting into it, but it sounded really interesting, where they were wanting to kick in kind of like your, X amount of dollars, and they had a kind of like a 5-year plan and projected returns, but they were going out. It was mainly in LA, which I had some experience with. I lived there for a few years, and they were kind of looking in Santa Monica, where there's a lot of these buildings that have been there for long time, need to be updated. But they would go in and they wanted to get the renters out, rehab them, and then the goal was, jack up the rents because it's just crazy out there, and then try to sell it. Are you doing something like a quick return like that?
Yeah, we don't. We're more long-term holders.
Long-term.
I have heard a lot.
Just curious. I was approached.
I've heard of that stuff being kicked around, and quite frankly, it sounds like California is where some of that happens. I don't know. That's not what we do. That's not what we've done. We've only sold 2 projects in our 12 years.
Okay.
Both were for our management style and size.
Okay.
Right. We entered in, both of them were 40 units. 40 units is more challenging to manage from just having people on site, versus a 200 unit building, right? Or a 100 unit building. So what we've tried to focus on is north of 40 units. Mm-hmm. So we took our 2 smallest projects and we sold them just because it wasn't kind of fitting our portfolio the way that we wanted to. We kind of want to reallocate our locations geographically as where we wanted to be.
Okay.
And so for us, we've always been long-term.
Okay.
Whether we are that forever or not, I don't know.
Okay.
But the same project we bought 12 years ago we're still there. We had, we had a 10-year loan on it. And we went through that loan. I think we bought out of it a little bit early, just to take the advantage of the interest rates.
Sure.
Because we kind of saw the writing on the wall that things were changing.
Yeah. So you got in at a low rate, or you?
So we refinanced
out of it. Yeah.
Yeah, but so that one we still have, and many of our projects are north of 5 years. It's been more challenging to purchase. There's a lot more competition out there in our marketplace now than there was 10 years ago.
Sure.
So acquiring a new product has been more challenging. It's a tougher penciling of a pro forma, but we're still out there trying to get more. And our goal is always for a long-term hold.
Okay. You brought up some loans. Just curious. I don't do commercial loans. I do loans residential, which goes up to 4 units. Anything beyond that is considered commercial. Are you going to, I know we've, talked backyard, chit chat over T-ball, whatnot. Where are you going to a bank typically, or are you doing any kind of like special financing where you find that, like I'm thinking like a life insurance, companies will do some sort of loaning of money.
Most of what we do is conventional financing through a bank here in town.
Is it Fannie Mae, Freddie Mac typically financing?
No, so most of it is conventional local bank.
Okay.
So we have a handful of local banks that we work with and banking relationships here in town. Most of those will be done at like 3-year to 5-year terms.
So adjustable rate mortgages,
fixed rate, or maybe it'll use, it used to use LIBOR. It use one of the indexes to kind of like create
Treasury,
create their rate of where they are today. Then like for our first deal, we did a deal with a long-term, more of a long-term solution. We used a mortgage broker here in town to create a relationship with Fannie Mae. So through Fannie, we ended up getting a 10-year mortgage at a low interest rate, and then it becomes non-recourse. Therefore, like your ability to for the bank to come after you if things aren't going well is a little bit more favorable for you.
Is that what the non-recourse means?
Yeah, and that was especially our first deal. Is like, we're 27. We're saying, hey, we've all never done this before, but like, if we could borrow your money, this will be great, right? And both my partner and I, we had to have our fathers sign on that first loan too, right? The bank is looking at us and saying like, who are these goofballs trying to do this stuff? So there are like different avenues that you can use for the commercial lending environment. But unlike your home, it's not as like, the terms are shorter. Okay. So as we kind of like project forward here right now with the new administration and where interest rates are today, is like many of our loans will be coming due here in the next 2 to 3 years. So like we'll have to adjust based on what that current rate environment is versus in the home world. If you signed your 2.75% loan for 30 years, like that's a great place to be.
You may never have to do a loan again.
You can feel pretty comfortable unless like something happens within like your, job scenario or family scenario where like, what your home is going to cost you from a mortgage standpoint forever.
Right.
For us, it's cyclical. So depending on the environment in which we're in, you might find yourself in a more challenging scenario than you did when you first bought the project, right? The nice thing is obviously you pay down the loan, so the equation all works out together, and you figure out what it's going to look like. But like every 5 to 7 years, you're typically refinancing your loan. Yeah. So banking relationships are important. Yeah. That you like are keeping up with your banks and knowing what's going on with them.
Yeah. Or maybe you've got a 2.625 interest rate that you really want to stay there for the long term, but your wife really wants to build a house, and you're like, no, we should just stay here.
That sounds silly.
The interest rates are 7% right now, honey.
I've heard a story like that before. I'm just trying to think of where it came from. But what are you seeing? I mean, like, so for you, like, right?
So what is today?
It's a tough environment, I think.
Yeah, it's a tough environment, but people, I think that we've got over like a psychological hurdle, personally, anecdotally, where people are understanding that, the rates are in the 6s, sometimes in the 7s.
Which is historically not horrible.
No, when I got into business in 2004, I want to say it was around these levels. Yeah. 6.99, I feel like, when I started. And my dad still always talks about, I can't believe kids today don't want to buy. My first mortgage was 18%.
We all have a dad who has that 1980s story.
Yeah, 1980. And he's like, I took out a 1-year arm. And, houses also at that time were like $60,000, $80,000, so a little bit different. But I mean, I think people have gotten over and realized like, hey, this isn't that bad. Like, hey, there's always an opportunity where rates can come down. And
I think like in real estate, whether it's your home or whether it's commercial or whatever it is that you're doing, right, is like I think in life it's always easy to look in the rearview mirror and be like, oh man, if I would have done that, or but like we're probably at the point that everybody just has to keep looking forward. And
just
we're probably not going down to 2.5% interest rates anytime.
Yeah, and there's a lot of people that have, like, I've been working with some people. A lot of people got off the fence, but like going on like 3 years, and I'm just like, each year you wait. Yeah. I mean, obviously real estate prices can go down. Both of you and I have lived through 2008, and but I mean, the appreciation level that we have seen in certain markets like Wauwatosa, I mean, Brookfield, where we're at, and Whitefish Bay. I mean, like, I had 1 year and a half ago in Tosa, $200,000 over asking. Yeah. And I had, in July of 23, I had either 4 or 5, all in Tosa, $100,000 over.
So that's interesting, though, like, from our standpoint in the commercial world. I mean, I balance this myself, is like, when we got into this commercial world, this multifamily world, which has gone gangbusters, like, it's really been a unseen appreciation of assets, is we always ask ourselves, like, should we be selling? Yeah. And like the question, which I know you and I kind of talked about before, sitting down at this desk, is like, so the question is always like, but then what?
But then what? What do you do?
Right. So like, you can 1031 it if you can find something. I think like in the commercial and the residential space right now, supply is a huge issue. And like, so because supply is an issue, then maybe pricing becomes an issue. And like, we're all wondering, like, if we all know what's going to be like next year or 2 years from now or 5 years from now, like, it's all an easy decision. And I think a lot of us sit here and we wonder, well, what are interest rates going to do? Yeah. What will these values stay high? Are rents going to hit a ceiling? Right. Like, we all don't know. So like, you got to make your decision based on the information that you have. And like, that makes this challenging, sure. Right? Like, if we sold everything, we'd say, great, what a great day. But then like, we would wake up tomorrow and say like, okay, well, we got to pay Uncle Sam. Yep. And like, it wasn't as great as we all thought it was, because we couldn't like move that money into
another property.
Yeah. Like, keeps our job going. Yeah. And so, while I love to play pickleball with you every day, and we could just like hang out outside, but like at the end of the day, there's like, it's not some people think it's easy to be like, oh, just sell. It's like, those conversations happen, but like, those are hard decisions to make.
Or the flip side too is, it's like, we've been on a heck of a run. I mean, I think just looking back again, anecdotally, I mean, I believe there's data behind this, but we can look back and see that the bottom, at least in the residential, I can't speak to commercial, was roughly 2012, where that was the bottom, and then it's been up ever since then. I think we've seen some softening a little bit here. But it's winter, man. We'll see what happens in April. It's going to get crazy soon. Yeah. And we're going to find out from Drew Lead coming in next after you. Okay, we'll maybe start wrapping up here. Ariana wanted me to ask. Tell me this. She had a question. She's like, well, ask Steve this. Because everybody thinks real estate's so glamorous. Is it all that glamorous? Or tell us, is there some horror stories or any interesting stories? I know you told me some interesting ones, so maybe we'll PG-13 it. Maybe not R-ish.
There's always interesting stories, because whenever you're working with people, there's going to be personalities in which are different than yours, and you have to adapt to. Like, I continuously like talk with my wife of like, like, it's not all negativity. It really isn't. But like, you have 750 units, let's say, and every single one of those person on any given day might have a problem. And you have 365 days a year. Like, the likelihood that there's going to be something going on every day is likely, which is why like you have to surround yourself with good people. Sure. Right. Yeah. So like, I mean, last night I have a 4-family in Wauwatosa, and I was hopping into a meeting at 4:00, and one of my tenants sent me a text, was like, hey, there's 3 inches of water in the basement because it looks like the floor drain is clearly clogged with something and it's not draining. Yeah. And so you're like, oh, okay, great. So like, luckily I have a good plumber who can get a guy out there immediately to take care of it while I'm hopping into my meeting. And then like, you have
And they're
your
like
helper guy who's in the area to go run to Home Depot and get some dehumidifiers and
or why
fans
did you
to dry the stuff out.
Or why did you try to cram half a rotisserie chicken down
well,
the shower
I mean,
drain?
I guess it all depends on how deep into these stories you want.
No,
I did have a woman who shoved potatoes down her toilet one time.
Oh,
and I wasn't sure why she did it, but I'll tell you what. When this is when we had our first project, and I was the maintenance guy, and I went up there and I was like, man, I mean, your toilet's, this is a little lady. And I was like, man, your toilet's very jammed up.
Yeah.
And like, as gross as it is, you pull something back, and I'm like, well, that's not what you think it is, right? Like, it could be a lot of things, not a rotisserie chicken. But I was like, what's down there? And she's like, she said, I shoved red potatoes down my toilet. And I was like, well, how many? She said, I think 8. And I was like, I think you're gonna have to pay for a new toilet. Like I'm just not gonna be able to work my way through this. Like a plumber would cost way more than just replacing the toilet, right? So there's always a story.
Well, one other short one. We got guests coming in here left and right. I'm loving it.
Busy day.
Busy day in the Snod Pod den here.
Did you ever buy that website, by the way, that I told you to buy?
Which one?
Was it
Snod Pod?
Snodpod.com?
Yeah, I haven't done anything with it, but I own it.
You should do something with
All right, we'll talk after that. I need your help.
We need a web designer in here.
Tell me, there was one last one. I got 2 more quick things, then we'll wrap it up. Didn't somebody have bobbleheads or stuffed animals?
Well, yeah,
short as possible.
Yeah. The first apartment that we ever walked into had a living room full of stuffed animals.
And it was just
it was just like a collection.
But it was took over the space.
Took over the whole living room. Yeah.
So that's what you're running.
You see a lot of stuff, right? I mean, it's someone's place. I've walked into your place before, John.
Hey, it's clean. Come on. Maybe not my office area, but last one. You played football at UW. Just wondering the workout. I'm assuming that it's almost like military style practice and whatnot. I mean, is stuff that carried over from sports or football into what you're doing?
So the interesting thing about what I'm doing today versus what my entire life was growing up, which was is being an entrepreneur, if that's what you want to call me.
I want to call you that.
Where I spend most of my time by myself in my car, going to properties, talking with some managers here and there, but there is a loss of the team aspect. So my whole life I was spent in sports doing team.
Sure.
But at the core, whenever you're participating in a sport at a high level is there has to be your own personal work ethic that's part of it.
Sure.
Right. So that part carries over. The part that's hard is the team aspect of it. So there's certainly the self-motivating factors that come from sports and growing up in sports and playing at UW.
Accountability.
You always gotta show up.
Discipline. Show up.
No one necessarily cares how you're feeling that day. You got to show up and perform, right?
Yeah.
So that carries over.
Yeah.
The team aspect is interesting though, because it's hard to always find that unless you're in an office or you're you have a team around you. So,
but I guess
I think every day has some reflection back of how'd you do this growing up? Or what are the characteristics of yourself that you see, on a daily basis? I still love to wake up at 5:30 in the morning, get my day going.
Yeah.
At the same time, I like to go to bed at 9 because I'm I put all my effort in already. Rest up for tomorrow.
Yeah.
So
got it. All right, man. Well, I love it. A lot of great information. Steve Johnson, thanks for coming into the Snod Pod.
Thank you
Red
for having
Sky
me, John.
Capital.
Red Sky Partners.
Red Sky Partners.
Yeah.
Thanks for giving us a bunch of knowledge, and we got to have you come back, talk a little bit more sometime, but maybe do a pickleball episode at some point.
Let's do pickle or paddle. We got friends here who can talk to us about it.
All right, let's
Teach
do
us
it.
a little something.
All right. Well, this has been the Snod Pod with Jon Snodgrass, your mortgage resource, where we're talking real estate, mortgages, commercial real estate, and beyond. Thanks for watching.